to another episode of the Lodhi Roundup, episode number 8, and this will be our wrap-up for 2024. Today, I have 3 amazing guests with me. I'm going out of my comfort zone. I normally have 1, and now I got 3. So let's see how this goes. I got 3 very smart people, and I like to immerse myself with smarter people so I can learn from them. And I feel like you guys will all do that as well. I'm going to introduce my guests one by one, and then we'll get the conversation started. To my right, I have Tyler Walbourne, who is an expert and a portfolio manager for REC Canada. Tyler, thank you for being here.
Thank you for having me. I think you're probably the first person that I've ever been featured on for a podcast that's called me smart, so I really appreciate that. I'm really happy to be here with the panel or the roundtable that we have, and I can't wait just to dive deep and to go through and go over 2024 and forecasting 2025. Majid, thanks for having me, man.
No problem at all, and now I can finally say this is a roundup, so Lodhi Roundup, because now I got a table of people that we can go back and forth with, so a panel. And to my left, I have Maria Angelescu, who is a realtor out of the Hamilton and Burlington market. Thank you for being here, Maria. How are things going?
Thank you for having me. I mean, things are going well. I'm happy to be here. Like Tyler said, I'm not typically invited on podcasts, so not to say that, I'm not invited places type of thing, but it's not often, let's say. So I'm stepping out of my comfort zone here. So I'm definitely very, very happy to be here.
I'm very much appreciative of you coming on and then sharing some knowledge. I know the GTA market could all be covered under one umbrella, or we can break it down. And then the goal today is to obviously talk about the pre-con, the West End, which Maria will be covering, which is the Hamilton and like the surrounding area. And then to the left of Maria, I have Mohammed, who is from the Kingston market. So we're covering East, West, Central, and then the pre-con. Thank you for driving all the way from Kingston and joining us here today.
Well, thank you so much for having me, man. I'm very, very excited. Like Tyler and Maria said, it's going to be a good roundtable.
100%.
I'm looking forward to it and looking to learn from you guys.
100%. And I think we can start off by with the easy topic, 2024, because we can all talk about what's happening in the market and how the 2024 market has changed compared to other markets or the other years. And I feel like this year compared to other years or the last 4 or 5 years, this year I at least had to work harder or more than before because the narrative in the market or for buyers and sellers has changed.
Yeah.
And it's changed dramatically, where people before were fighting for houses and now they have the ability, they have the product, and people are like, I'm just gonna wait.
Yeah, and you hit the nail on the head, Majid, with that. I find I've been licensed now for 11 years, and these last 2 years specifically, so 2023 and 2024, I've done more than 4 or 5 times the work, the outreach, the conversations I'm having with, my insiders and our potential investors, with only doing maybe, 30, 40% of the actual production that we're used to seeing. And I think one of the main reasons for that, and we could talk about rising interest rates, but I think that's a byproduct of what I'm about to say, is that there's no urgency in the market right now. For the last 10 years, since I've been licensed really, almost the whole time, the market did the hardest thing in regards to conversions and helping people find those opportunities. Is it created such a hot, urgent market where people, we were more thinking about how to service their needs as best as possible. But these last few years, what I've been working on really, really, really hard on is to learn how to understand the individual investor's why, really try to uncover that. And I go deep. Like if someone says they want to retire in 5 years, I say why. And then I just go really deep into, give me that that most important piece of data on why you want to do that. So then I can help you reverse engineer to get there. And, that, as well as being able to listen more than speak, has, truly helped me develop on the personal side on how to actually deliver the type of guidance and information I think we all needed to do. Because, when it's a very urgent market, we're servicing. And that's great. And if we're talking about our ability to breathe out and help as many people as possible, obviously those types of markets are the way that we're able to help. But I think if we're trying to work on our craft and work on ways that we can position opportunities and advantages, disadvantages, things to consider to the individual investor, we need to do it in these types of times because now we have the ability to do that.
Yeah, I think the investor mindset or investing in general was very, people thought it was very easy because anybody and everybody was investing. And I know, Mohammed, in the Kingston market, I know that you guys do a lot of investments and you have a finance background as well. I think I didn't do justice to Maria and Mohammed when I introduced them. Mohammed is basically an investment specialist from a finance background, and Maria works on award-winning mother-daughter team in Hamilton that's been there, I think, for 60 years, correct?
So, yeah, 60 years of combined experience.
Yeah. So
it's amazing.
Mohammed, like the Kingston market and the investment, I know he basically talked about and I guess took the conversation that way where investments, right?
Mm-hmm.
And everybody thought it was just very easy, just get in the appreciation and it's just all easy. But I know you guys do a lot of conversions for duplexes, triplexes, and how's that been compared to how it was before and now that the mindset has changed for people?
Yeah, it's been amazing. So like you said, my background's in finance. So I used to work in risk analysis. I worked there for about a year. I worked corporate after college. Then I quit cold turkey and got my license and I was like, I'm gonna dive in and do this for a living. So first year was a bit tough. My first year was when things were kind of touching the peak, right? So as a new agent, it was kind of crazy. But at the same time, when it came to urgency, that was the most urgent time.
Yeah.
People were speculating, people were throwing money. You throw down 50K and into a property, next thing you know, it's up another 100, right? So it was a very speculative time. What I've come to learn is as the market changes, it's important that us as realtors adapt to our clients' needs. So when people ask me, is the market good or bad? I'm like, are you looking to buy or are you looking to sell, right? What is your goal? Like, what are you trying to do for me to be able to better assist you? Because if the market's good and you're going to buy, are you going to pay over asking? But if the market's bad and you're going to buy, are you going to get a good deal? So it doesn't matter how the market's doing or if it's the right time to buy or sell. It comes down to if it's the right time for you to buy or sell. On the investment side of things, we take single family to duplexes, to triplexes, to fourplexes. So instead of speculating, what I advise my clients is we don't need to speculate anymore. As long as we can get you a good property, you'll make money on the buy. So it comes down to your down payment, the capital needed upfront to do the renos. In about a 6-month time period, we can refi you out. And as long as you don't go over budget and you kind of follow the guidelines that we can put in place for you, the money's there to be made.
100%. And I think everybody likes to ask that question, how's the market going? But based on what? Like, what are you looking to do? Which is what you said. And I think to Tyler's point is like finding out the investor's why.
Yeah.
Because till we don't know the why, we can't really help you or guide you, right?
100%.
And I think that is very important. And in terms of the Hamilton market and the buyer's mindset, I know we're all talking about buyer's mindset, but in a different way. But what did you see buyers do in Hamilton or just in general? Because the mindset, I think, has changed fully.
Yeah, I think us as realtors with the clients that we're dealing with, we're all kind of getting the same response or dealing with the same attitudes and mindset across the board, across Ontario, across probably even Canada as well. And that's simply because we know that the economy isn't doing all that great, right? We've seen that Bank of Canada has now decided, let's raise interest rates again. It's the 5th time in the row. And the reason they're doing that is they're trying to stimulate the economy. They're trying to stimulate growth. They're trying to get people to borrow money to make the purchases that they need to make. Houses and homes in general being one of them, to make those investments, to get the housing market to move. But I think people have caught on to that. And especially from the pandemic, I think people are very, very nervous about, number one, job security. I send out a newsletter each month and I do a lot of, I follow the Bloomberg Nanos Canadian Confidence Index, if you guys have heard of it or not. Basically, they look at how confident are consumers in the economy, the factors that make up the economy, and what factors affect how confident they are in the economy. And the number one issue of concern for the last, I think, 16 weeks in a row has been jobs and job security. So people don't know, am I going to get that promotion at work? Am I going to have a job next month? Am I going to be able to put food on the table? So when people start to have these concerns, and they have been having these concerns, I think post-pandemic, since things have really, we saw prices increase 40, 50% in certain areas, and then they fell. And so what people do is they start to pinch pennies and they start to watch their pocketbook. Where am I spending money? Where can I cut expenses? Because the last thing anyone wants to do is default on their mortgage. That is such a scary situation to be in. And so I think we're just seeing this ripple effect take place in the market from really, really high highs in the real estate market and herd mentality of, I need to buy, everyone is buying, my cousin, my mother, everyone is selling, to no one is selling, no one is buying. I'm going to sit tight, I'm going to sit pretty right here with the little bit of money that I have. I'm going to cut expenses where I can, and I'm not doing anything until I am 110% confident that things are going the way they need to be in my life. So that's what I'm seeing, and in terms of buyer mentality in general, people are really pinching their pennies right now. They're watching their pocketbook. They're really looking out for job security right now. And I don't think people are going to feel all that confident in the real estate market until they really start to feel more secure in the economy in general, but specifically in job security. And we just don't have enough confidence in Canadians' job security at the moment. So I've just kind of seen that attitude over the last year or so.
Do you find that a lot of the investors that you both are speaking with, and Majid as well, that you three are speaking with, do you find that a lot of these investors or potential investors are over leveraged? Like
you had.
Okay, so for me personally, I see a lot of my investors. It's a very good question. It comes down to what is over leverage.
Yeah.
Right?
Yeah.
So for them, they just look at if the numbers work, if the debt is servicing themselves and they're making cash flow, it's okay. For them, it's a long-term game, right? Unfortunately, over the last few years, it's become a very short-term mentality that you're going to buy real estate and within a year, you'll make 200K.
Yeah.
People started flipping it, right? They were basically speculating, and that's where people got into trouble. Even on the
That's
pre-con
where they got
side, they
screwed.
were basically flipping contracts.
That's
not really investing, right? You have a game plan, which is what we talk to people about. What's your why? And then 5-10 years, you buy, hold, and then you either refinance, pull the money out, and then buy another one. That's where you make the money.
Yeah.
And I feel like, to your point, like, what is over leverage, right? As long as your expenses are covered, I think it's okay. But if you're looking for passive, or if you're looking for cash flow, in the Kingston market, I think cash flow is an option. But I know in the Durham or Toronto market,
It's
maybe
tougher.
cash flow is not an option.
It's possible, but you got to create the deal.
It's
Yes.
very
You got to create cash flow. You got to.
Kingston's very good. I mean, the numbers make so much more sense, right? You can get most of your money out on the refi. Like triplexes appraised around the 8 to mid 800s.
Yeah.
If you're buying around 450, maybe even 5, and you put 150, 200K in to get it done, you're all in for 700. It's appraising at 850. You can get some of your money out. Now you're cash flowing. You go do it all over again. Yeah. So it just makes way more sense to do it there. And when people ask about, should we flip it? Should we hold it? It's not up to me to decide, right? It's up to you to decide. What do you want? You want short-term money right now, or you want long-term wealth in 25 years?
Yeah, because you could be exposed to the market as well, flipping.
Right.
Like even at the turn of the, when the market started to shift, in my opinion, March, April, May 2022, when we started to see prices starting to decline a bit, especially on the freehold side, the investors that were most at risk were the ones that were buying to flip.
That's right.
And then now what did they have to do? They either had to decide to sell it for the price they bought it for, so they're at a loss because they're not including the carrying cost to hold it while vacant, as well as the capital that they put in to fix or to renovate, or they decide to hold it. And that's not part of their plan right now. They were determining that this would be a jump start to be generating some wealth. Then I can go and do something else with it. And going back to like the over leverage question, I think it's something that I tackle a lot when I speak with investors. And I find what a lot of people looked at, and that's why I think these types of times are learning lessons for everyone, is because when someone determined in 2020, 2021, 2022, if this was the right investment for me, what they did is they looked at the overall carrying costs. Can I hold it? based off of today's rents, based off today's interest, which is fair. Like, you have to look at that even in today's market. But what they didn't consider as well before making that decision is how much debt they're actually assuming.
That's right.
And that's a very important metric to see as well, because, especially if you're someone that, isn't a high net worth earner salary wise, the debt that you're assuming can also hinder you from investing in the future.
Mm-hmm.
And it's just building that right plan depending on who they are. And, I find that investors right now, like one of the challenges is that carrying the properties now, they're underwater in some cases, or on variable, or, they're in a fixed under 2% rate and they're about to get renewed at 4.2, 4.3%. So, they might have a liquidity issue. And then the second one is that, I do have a lot of equity, but now I can't access that because my work has changed. My ability to get financing approved has now changed. And those are byproducts of interest rates as well.
Yeah, I love how you said that, because at the end of the day, debt became so easy to get.
Yeah.
Right? When rates are so low, everyone's like, it's super cheap. What's another 200K?
That's right.
Right? So it became very cheap to get. But going back to conversions, once again, we try to minimize the risk, right? So for investors who do want to flip, listen, the numbers work. You may not make as much money, but you won't lose money, right? Because you've added the value. We didn't speculate here.
Yeah.
These are the running numbers for duplexes. These are the running numbers for triplexes. This is the spread here. So if you want to flip, great. If you want to keep it, even better.
And then do you find that, like, a lot of people want to do that? And I find, anyways, in the markets that I look at, that the investors think that they're going to make profit, like actually like direct profit after the conversion.
Mm-hmm.
And in most cases, what happens is, let's say you finish a basement, you legalize, you put $200,000 in. Usually the value will go up by about the money that by about the dollar you put in. So, you put 200 in, it goes up by like 220 in value. Is that how it is in Kingston as well? Or is there profit to be made on the conversion?
It depends on your buy. Like, I'll give you an example. Unfortunately, I can't name the house, the street and the number, but we got one in the summer of last year for around $350. It was a side split, I believe. The goal was to convert it to a duplex. Funny enough, we could triplex it, so we did. $350 turned to $840.
Oh, nice.
In 9 months.
Wow.
Right, and I think it was about 150 to maybe 180,000 put in. So it worked out really nicely.
Mm-hmm.
But do you always get these houses for $350? No.
Yeah.
It was one of those things. We saw it on the same day, and my client bought it the same afternoon.
That's right.
So
yeah, the opportunity came. And
The opportunity was there, and that's where you got to keep looking
that's
for
it.
things, right? Not every, I guess, opportunity is a good investment,
100%.
right?
Oh,
And
100%.
we always talk about this on the pre-con side, because the pre-con market took a huge hit as well, and the condo market along with that. But not every pre-con opportunity is a good investment, but there are very good opportunities out there that you could make a good investment out of. And I feel like that's where people get it messed up, right? They feel like every pre-con is a good investment, which is not. And
it's hard to determine, though, in my opinion, what's good and what isn't good, unless you actually look beneath everything. Because they also have the best marketing. They put a lot of money towards their marketing,
100%.
Their sales team, the presentation center. A lot of that could wow you, but if you don't look at the fundamental, factors of determining if this could be a good investment or not.
what would be 3 factors that you look at
So there's
when you're actually looking at a pre-con, or I guess even a resale?
So like in regards to market research and analysis, there are 3 pillars that we look into. And this is great for pre-construction, which is one of the divisions that REC Canada helps investors with, but also like to determine on the freehold or the resale market too. And those 3 pillars, first and foremost, is location of the home. You can't pick up the home or building and move it somewhere else. Location is very critical. And those 3 things we look into in location specifically is 1, transit infrastructure growth. Values will always follow transit. We want to get into an area as soon as transit development has started and try to get in before it's completed. Number 2 is the potential for population growth or population density. You can determine that in a few ways, but you want to target areas that aren't focused on urban sprawl, so like separating people. You want high density areas or the potential for high density. A good way to determine that is just to drive around to see, what developers are purchasing, what developers are trying to convert. That's on the commercial side, as well as the residential side. Just drive around and see, those pending with the city approval types of notices. And then number 3, and it's one that I don't hear a lot of people speak about a lot, Majid, which is employment diversity. Employment diversity is very important. You don't want to rely, I believe, you shouldn't want to rely your real estate investment in a location that's anchored on just one main industry. An example of that, call it 10 years ago, something like Oshawa. So Oshawa has a GM plant there, and it's now changed. But 10 years ago, it was an area that REC and our organization was saying, yeah, tread lightly there, because sure, it had transit. It had the potential for population growth because of what development was doing at the time, or developers were doing at the time. But every single time the GM plant threatened to leave Oshawa, to close its doors, every single time employees were threatening to strike, what happened to those values in the short term? They went through turbulent times. And a diverse employment sector will help hedge against a single sector having a bad year.
Absolutely.
So those are the 3.
We also saw that, I guess, to your point, in Alberta, right, when they're heavily basically reliant on the oil market. And I feel like one of the good things in the Kingston market, their employment, right?
Yeah.
So when we do investments in Kingston with our clients, I know they have 2 or 3 very strong employers there, which I think services the market, which you could probably comment on.
Yeah, we have a lot of public service jobs. We have 3 big colleges. We have Queen's University, we have St. Lawrence, and we have RMC. We got the military there. We got private sector jobs. It's a very stable market.
The vacancy rate apparently is very low in Kingston.
I think from what I last remember, it was 1.2%. We're
Wow.
just second
Oh, wow.
behind Peterborough, if I'm not mistaken. But
That's amazing.
yeah, no, it's pretty good. I'm not going to sit here and say I'm a pre-con expert, because I'm not. I don't do pre-cons. My thing is I don't like to speculate, right?
Yeah.
I like to have a much safer, more risk mitigated investment. And that's why we kind of switched our kind of focus to these conversion projects, because we're not waiting or speculating for the values to go up.
Right.
We know what we're pushing the values to. So pre-cons are great. I think for the right person, the right buyer, the right investor,
100%.
it can be an amazing opportunity. Just not for me and
Oh,
my clientele,
100%.
Isn't
Isn't that the best thing about real estate, though? Is that
There's so many avenues
so
you
many
can
options.
Yeah, exactly. There's so many different investment vehicles, and it all comes back to what you were saying earlier, Tyler, is the why.
Yeah.
Why do you want to do this? What does your lifestyle look like? For someone like a doctor, for example, who's working 80-hour weeks, maybe they don't want an investment that's extremely hands-on and they need to do a flip. Maybe they want something like a pre-construction where, they can just hold on to the agreement until it closes. Hopefully it's increased in value. And then they go and get a property manager, or maybe, the building already has a property management company that's built in to find and lease out and get tenants for them. And it's more hands-off that way. Whereas someone who wants to be super involved in a flip, a conversion, like the things that you do, they might have a completely different lifestyle.
Oh,
So
for sure.
it all comes down to, like you said, the why. Why are we doing this? And what's your lifestyle? And what can your finances allow, right? We can't forget, what can you afford?
I think some
Right.
people get scared when you would tell them that, hey, buy a house, put money in it, do the renos, turn it from a house to a duplex or triplex. They might not want to do all that. They might like the passive side of pre-con, where they just buy it, hold it for 5 years, rent it out, where they don't have to worry about the structure, the roof, they don't have to worry about anything. I got a lot of my young professionals who like the condo route, who like the pre-con route, just because they're hands off. They don't want to get their hands dirty. They don't want to go to the house. They don't want to do the renos, right? Even though we can help them with it, we have the contacts for that. But their approach is that, hey, hands off, right? They're okay with if it's not cash flow as it is in probably Hamilton or Kingston, but they were aiming for that passive appreciation or the equity, but things have changed even on that side, right?
Well, you have to be careful, right? Especially on the new construction side, like pre-construction, is even based off of our metrics when we sold the opportunities in 2019, 2020, and we say no way more than we say yes to launching opportunities. We're not the type of group that launches every single project. We're very thorough with the analysis on the opportunity, the location, the incentives, the price point. But even then, some of these opportunities that are completing today for our investors are either negative $700-800 a month in cash flow as of today, most of which are in the occupancy stage because occupancy fees for the first time ever
Have
are more
gone very high.
expensive
Yeah.
than if you were to close on it. And usually, over the previous 8-9 years, it was more occupancy fees would be a few $100s less than what your holding costs would be when you get the mortgage. Not the case right now because it's based off of construction interest rates.
Right.
But then you have to ask yourself moving forward, right? If pre-construction condos is the right opportunity for an investor, how do we determine which opportunity is right? And how do we determine which time is right? And I think about this a lot because we do more than just pre-construction here. My job isn't even to just talk about pre-construction. It's to build plans and talk about what might be right for them. And, thinking about, and I think we're going to be talking about forecasting in the future, so I won't talk about that too much right now because I'll just say the same thing that I'm about to say now, so I'll shield that. But what I believe we have to look at for pre-construction condos now is lack of price disparity compared to resale opportunities, which is really hard to find.
Absolutely.
Because the municipalities, when you build, they have these builder fees that are associated to it. And fair or not, it adds, in some municipalities, it's over $200,000 a unit that gets tacked onto the price additionally, which means something that's selling for $700,000 potentially to the developer is only worth $500,000 to them.
Yeah.
Right? Because $200,000 is going to the city. And so it's hard, but we can find opportunities where it is really close. Like I probably would say like no more than $100 price per square foot than what we see in the resale market, unless the build is projected to be out for like 7 to 8 years.
Right.
If that's the case, then you can go a little bit more, I guess liberal with that.
But you get to buy time in that case, right?
For sure, but there is a time loss percentage as well, right? Because your dollar could be used in other opportunities. So that's why you have to be very strategic with the opportunities. Cashback incentives will help also if you can negotiate really, really strong cashback incentives. I would probably lean, funny enough, away from rental guarantees. I know people love it because it's such a hands-off investment.
Well, it's a good marketing scheme, right?
I would rather the cashback though, personally, on closing to I guess even try to eliminate as much closing costs as possible because 1.2% in Kingston, like we're under 2% as well in Toronto or the GTA, Hamilton included, right? And I'm really finding opportunities like now it's even harder for me to like check one off for us. Like I do even more due diligence, more so, and I thought I did a lot back then. And there's only a few that are really checking off. But then we're also not seeing a lot of new construction starting sales-wise. So it's an interesting time to offer that type of asset to someone.
Absolutely.
Yeah.
Yeah, on the pre-con side where they keep saying that, yes, like anything on the pre-con side right now, for you to build, it'll cost more. And that's where the opportunity is on the resale side. I know we have talked a lot about investments in general, but I feel like the cost to build, the cost for them to buy land has gone up. So the new inventory coming in the market will have to be, I guess, priced higher for them to build, right? But on the resale side, there's a lot of opportunity this year where people could have or can still even buy where it makes sense. Numbers make sense. I'll give you an example. Just like 3 days ago, we did a showing at a property in the Beaches area, just south in Toronto. And it was a lot 60 by 140, I think, an amazing opportunity. And that lot would have easily gone for like 1.7, 1.8 minimum. Sold for 1.2, right? And where properties are not selling for a month, 2 months, this one won in like 4 days. So there's a lot of opportunity, I think, on the resale side. Apart from just investments, if you have a first-time home buyer or somebody looking to upgrade, right? You have the opportunity now. And I wanted to ask this question to Maria before, but then we got into the investment side. But just basically families upsizing or buyers or sellers, just because I feel like the Hamilton has a lot of different pockets where price varies. Absolutely. Even in Scarborough, we have north of 401 and south of 401. You have the Malvern, you have like the Morningside, there's like good patches there. So in Hamilton, I know different mountain area and what like So can you shed some light on that for end user, not investors,
Yeah,
right? So I know we
absolutely.
talked a lot about investors, but if somebody's going to live in there.
Yeah, so I'm seeing definitely a lot of first-time home buyers being in the Hamilton Center. They're not going up in the mountain simply because being up on the Hamilton Mountain, it comes at a premium, it comes at a higher cost. You're going to have pretty much smaller lots, like much smaller lots in the downtown core, of course, but people really like it there because you have a host of restaurants. Like I love going to James Street North because they have, in my opinion, like the best restaurants down there, and cute little shops, like little one-offs here and there. So we're seeing definitely, I'd say, a younger population hang out in Hamilton Center, in the downtown core, around the downtown core, Hamilton East, because price points are much cheaper there. Like you can find a detached 3-bedroom, 2-bathroom home there in the $500,000 to $600,000 range, and they're quite nicely done up, right? They've got parking, they have a nice backyard as well, more narrow lots, but for first-time home buyer, it has what they need. Then we're seeing the move-up buyers. Potentially, they're coming from the downtown core in Hamilton, and they're going to the mountain. You're going to find a lot of bungalows there, bigger properties, mature size lots, your 50 by 100, your 60 by 110. A lot of the units there will also have, not a lot of the units, but we're seeing a huge trend of some conversions happening into duplex or triplex properties. I also am seeing first-time home buyers go up on the mountain as well, but also take advantage of house hacking. So they'll be living on the main floor, and they'll buy a property that already has that basement reno done, because the first-time home buyer doesn't typically have $100,000 sitting around to do their basement renovation to turn it into a legal duplex or a triplex. So they'll buy the units at a higher price point, I'd say closer to the $750,000, $800,000 range, to get into that property. They live on the main floor, and they hack it so that their carrying cost of their mortgage is being paid by the tenant that's living in the basement or in the back unit. So that's kind of the trend that we're seeing there. Otherwise, we have, again, like I said, the move-up buyers coming from the downtown core. Let's say they're a young family or an older couple going up on the mountain. It's definitely a little bit more relaxed there. You are having to drive most places to get to certain amenities there, to your grocery stores. It's not as walking friendly, but that's where you have, you're closer to conservation area. It's easier to access really beautiful trails. Like Hamilton, I believe, what do they call it? The #1 waterfall district in is it all of Canada, or is
There's so many nice little pockets of reserves there.
Exactly, right?
The
So,
reservation
but then you also have the west end of Hamilton, where you've got McMaster University. So you have a population there of younger students. So it's a very diverse demographic and population. And when people hear Hamilton, I get this all the time where they're like, ooh, like I don't want to be in Hamilton. It's dingy. Hamilton is massive. Hamilton is a region. So you have the city of Hamilton, then you have Ancaster, Flamborough, Waterdown, Stony Creek. These are all cities within the region of Hamilton.
I think they all used to be separate cities, and then many years ago they became
amalgamated.
one
Yeah.
and became Hamilton,
Yeah,
but
so-
a large area.
Exactly. It's massive. So like Ancaster looks completely different from Stony Creek, at least certain areas. In Ancaster, you have a lot of retirees. You have a lot of, couples who their kids have empty nesters who've been moved out. They're in Ancaster. They're in the really gorgeous bungalows with the big lots, with the pools for the grandkids to come over. Versus Stony Creek, again, that's another really good family-friendly place where there's a lot of townhomes there, and it's more affordable. So I love Hamilton for that reason, because there's something for everyone there. It appeals to everyone, in my opinion. And I think once people get over the fact that Hamilton sounds dingy, or the Hamilton that they thought was there is no longer there, I think it's just going to absolutely take off and boom. And we're already seeing that happen, because Hamilton actually has the #1 most approved pending permits in all of Ontario. So there's going to be massive redevelopment happening there, massive growth in terms of residential and commercial development. So even 10 years from now, it's going to look entirely different. So I love Hamilton for that reason. It's just got something for everyone.
And there's a lot of construction that started there already.
Absolutely.
So they're going to be completed within that kind of time frame.
Oh yeah, the north end is being completely revitalized, and then they're doing the light rail transit that's going to go from east end to west end of Hamilton, and it's I think something like 14 kilometers long, so people can at least get from one side of Hamilton to the other without having to spend a half hour driving in the car. So there's a lot that's going on there, and it comes back to what you were saying about pre-construction, Tyler, where you want to look at where is the transit happening, what is going on with commercial and residential development. Hamilton has all of those things. They tick all of those boxes right now.
Yeah, on the pre-con side, when we look at projects, I know there's a couple of good projects and a couple of good builders that are building in Hamilton right now. And to Tyler's point, location and transit, right? And I think I was doing research on a project, and if you were to buy in Hamilton compared to Toronto, the price of the property was much cheaper in Hamilton, but the
Yeah.
rent was very similar to what you would get
Absolutely.
in prime areas in Toronto. So there is, again, a lot of opportunities. But to your point, when you talk about Hamilton, people are like, Hamilton,
Oh, Hamilton.
right?
I get
and
that
like,
all the time.
and when like 2019, 2020, 2021, when I started talking to people about Kingston and like going out in Kingston and seeing the value, people were like, Kingston, right? So I think it's the perception that if it's too far out, you can't rent and the area is not good. But coming to Kingston, like I know when my guys were investing in Kingston and looking at opportunities in 2021, you were like, we picked up a unit for somebody like 350, 360, and like they were making a lot of cash flow. But come 2022, it went skyrocket and the same units were looking at like, I don't know, 550, 560. And at that point, it didn't make sense because cash flow was gone, right? But in terms of number of sales and the price going up and price coming down, what have you seen? Because in general, 2020, I think one was like 122,000 sales in the GTA, and now it's like last year was 65,000 and change. This year they were looking at about 67, 68, but I think we'll probably hit, no, they were looking at about projected 80 to 90,000. We're probably going to hit about 67 to 68,000. But the change in the price and perspective, because a lot of people from Durham at least were going to Kingston to either move there because it made sense, but also to invest there because that also made sense, right? But have you seen that shift now? My guy's not coming there.
Yeah.
Your guy's buying there.
Yeah, no, there's definitely a shift. I think we saw a lot of people from Toronto wanting to buy in Kingston because once again, properties that you bought kind of near the peak time, 1 month you bought it for 550, 2 months later it was worth 650, right? So for them, it's like, okay, we can make 100,000 on 20% down for 550, which was nothing for a lot of Toronto people, right?
Yeah.
But have things changed? 100%. I know we focus a lot on the conversion side, but we do pre-cons as well. But the difference between our pre-cons and I think the pre-cons in the GTA is the timelines aren't 3 years, 2 to 3 years. If you buy a pre-con house from us, a semi or a detached, it's ready in about 6 to 12 months. So you're not speculating what's going to happen 3 years from now. You should have a pretty good idea about your finances 6 to 12 months from now if you're buying a house. Have sales come down? 100%. Have prices come down? 100%. But the thing is, what a lot of people don't understand.
It makes sense now. So prices make sense now.
Price makes sense now.
Affordability-wise and even numbers-wise, if you're, again, investing or buying as an end user, it makes sense because I think it shot up way too fast.
100%.
And to your point, I guess in the GTA or I guess in Toronto, depending on what kind of pre-con you're getting, if you're getting a condo, it's maybe 5-6 years. But if you're getting a detached or a townhouse, it's still about a year to maybe like
18 months
15 months. Yeah.
18 months.
So
okay.
it all depends. But I think on your end, it's a little bit shorter, which if you're an end user, makes a lot of sense because you can plan it out.
100%.
I have guys right now who bought in Milton. They got to sell their property in the core and they don't know when it's going to close. They don't know when they should sell. So there's a lot at play.
Yeah.
And the market is changing, I think, almost every week, if not every month.
Yeah, all the time. And going back to like what I said earlier, debt got so easy to borrow back in the day that, we look at the average price and how it's come down, but has it really come down or were people just overpaying, right? Realistically, what was the average price? It was just if 5 houses sold for whatever amount, we just got an average and every single house went for over asking. But now houses don't. If you list something for 600K, it'll hopefully sell for 100% of the list price.
Yeah.
It's not gonna go for 750 anymore. So I tell people all the time, prices have come down, but it's just because people aren't overpaying for houses anymore. This is the price of a house.
Also, the demand has come down, right? So before they would have 10 people fighting for one house.
Yeah.
And right now they got maybe 2 people fighting, maybe 2 people,
Yeah.
right? But it's still, if everything aligns to your goals, it makes sense.
Yeah.
Right? But I think coming back to like the herd mentality when you're fighting for a house, maybe it feels better for buyers because they're like, I won and 10 people didn't get it, I did.
Yeah.
Right?
The problem also is that liquidity isn't there anymore for people, right? Unfortunately, over the last 2.5 years, people have bled significantly financially. And it's just a very, very tough time for a lot of people. We're seeing a lot of foreclosures. Unfortunately, we're seeing a lot of people lose their homes because you just can't service that debt anymore. So
there's going to be a lot of investors or previous investors and purchasers that do not trust the market anymore and will never buy again.
Yeah.
Absolutely. Yeah, I've had those conversations with people. I had an investor client that I was talking to a few months ago, and he has several investment properties here. He's still renting them out. Like I just did a lease for him recently. And we were talking about, okay, like, are we going to expand your portfolio? Are we looking at any other sort of investments? He's like, Maria, I am never buying another property again. I will lease these properties out for however long I see fit, for however long it fits into my plan. But I'm not buying another property here in Canada. The landlord and tenant board is just an absolute pain in the ass to deal with. We know that they favor, 80% towards the tenants, 20% towards the landlords.
If we're lucky.
Exactly. The Residential Tenancies Act, it's not made for landlords. So as much as we talk about investing and how great it can be and how you can get an amazing return on your money, we have to think about what comes with real estate investing. If we're doing the traditional, okay, I'm buying a duplex, I'm going to rent out the main floor, I'm going to rent out the basement. You've now become a landlord. What comes along with being a landlord? Because I've had conversations with people who we're talking for months and months and months about, okay, this is the kind of investment that I want to purchase. This is how much I have. This is what I want to do. Then I'll send some information over about what it really means to be a landlord. If they decide I'm going to be, the first point of contact, I'm not going to hire a property manager. They don't realize all the rules that are working for and against them. And so then we've spent months and months trying to figure out the right investment, only for them to then come to the conclusion to say, I don't want to be a landlord. I want to invest in real estate, but I don't want to be a landlord. And then we're starting from square one again to figure out, okay, where can we find an investment for you that's still within the real estate realm? You're not having to deal, front and center with tenants, or we get a property management company involved, but then that's another expense. And they don't want to spend that extra expense.
Or they take on a partner.
Exactly. So I think it's just always really important to remind our investors, if that's the avenue that they're going down, where they're going to be dealing with tenants hands-on, this is what's required of you as a landlord. Because I see, and I'm sure you guys do as well, so many crazy things on the internet, both on the landlord and tenant side of things, right? Tenants are doing absolutely outlandish things. Landlords are absolutely doing outlandish things. They don't know the laws. They don't know the rules. I'm just seeing some crazy advertisements out there, and they're asking for the craziest things from tenants, things that are actually not allowed as per the Residential Tenancies Act. So I think it's just always important to remind our investor clients that are going down that route that this is what your obligations will look like if you decide to invest and be, someone that's dealing with tenants directly.
And I think that's where, when people wanted to invest into real estate but didn't want to become landlords, and they saw the pre-con market and the assignment market, and then they can flip just the paper, that took off. A lot of people made money that way too, but it wasn't, I don't think it's the right plan for you to invest into real estate, because what's your fallback then?
Exactly.
What if you can't assign properly? What's your fallback?
I wouldn't. Maybe years ago, people got into it simply because they knew a couple years later they'd make hundreds of thousands on assigning the contract. That's just not the case anymore. We see I'm sure you guys are all part of Facebook groups where you're seeing assignments go up and they're taking a loss. And there are so many out there.
They're not moving.
Exactly. So I don't think it's a good idea to get into buying a pre-construction unit right now with the sole purpose to assign the contract. You have to have an exit strategy.
You should never buy a pre-con unit with the sole purpose of assigning it. A lot of people have asked me that, and I'm like, I'm completely against it, because what if the market changes, which it did, and you can't assign? Because right now the market is flooded with assignments.
Oh gosh,
and you're not making money on it. You're losing money, but that's if you're able to sell it. Sometimes you're not able to sell it, right?
You have to have a closing strategy. You have to.
The problem became people thought it was very easy. Everything when you're investing has a risk. Whether it's real estate, stocks, whether you're lending money, there's always a risk.
Absolutely.
Unfortunately, people just didn't understand that. That's why we went from helping clients flip properties to converting them. Like, listen, if you want to flip it, great, let's try. If not, you have something to fall back on. This debt that you have, if it doesn't sell in a month, 2 months, 3 months, will be able to service itself. We'll pay you monthly. And when the time gets better, you can sell it off then. The risk that comes with that is, what if you get a bad tenant? Now, when you work with a team of professionals, we can do those credit checks, we can check their income, call their employment and whatnot. But what happens 6 to 12 months from then, once they move in, if they lose a job, if something happens, that unfortunately is something no one can ever predict.
Yeah.
So that is a risk that comes with real estate investing. That's something people need to be ready for. So that's why we always say, like, make sure you have good income, right? Make sure you can service this debt in case this tenant stops paying. Not saying they will, but worst case scenario, the 6 to 12 months that it's going to take you to get these people out, make sure you can service that debt.
Yeah.
And when you have a duplex or a triplex, at least you know if one's not paying, the other one or the other two or the other three are.
Yeah,
Can
you gotta have a
help
reserve
carry
fund. That's
So-
that's a really
I was
good
about
point.
to
Yeah.
say, yeah, put a portion of the monthly rent that you're getting aside, just a little bit for these worst case scenarios that
Yeah.
unfortunately do happen. And I think it does come down to just being educated and being well informed and making sure that you're working with a professional who's going to hold your hand throughout the
Yeah.
entire process. We're not talking about, small stocks or small amounts of money. We're talking about hundreds of thousands of dollars that people have worked hard to save up, or acquire over a period of time. And we want to make sure that money is as protected as possible.
Mhm.
And for us to sleep well at night, like I want to make sure my clients are taken care of. Because the last thing I want is for someone to call me, a year or two later and be like, this is the worst possible thing I could have done. And of course, there are cases where there are things just out of our control. Like who would have known a global pandemic would come about? Like no one could have predicted that. You know what I mean? So there are scenarios that happen where we just can't control the risk, but there are a number of steps, like you said, that you can take to mitigate the risk. And specifically when talking about tenants, doing the proper vetting, doing the proper screening, meeting them in person if you can, doing this, like there's so many things that you can do. But at the end of the day, like you said, risk is going to be there. You have to decide how comfortable you are with a particular level of risk.
Yeah, to quickly touch on what you said, to have a reserve fund, I think it's very important. People on social media always talk about cash flow. And it's nice. I mean, if you have 10, 20, 30 doors, it's nice to have 10, 20, 30K in cash flow. But if a furnace breaks down, or if two furnaces break down, that's a hefty amount to get someone to come out there to install a new furnace, the time that it takes. It's a lot of costs that come up. And if you don't have that money ready, that credit card's not going to look too pretty then.
Yeah,
right?
because then you have to leverage. You got to
have to
leverage
leverage
debt
even more.
to go and pay for these
And
things.
how much do you want to leverage? Because housing debt is one thing. At least it has a lower interest rate. When it comes to credit card and other types of debt,
Oh, yeah, for sure.
then you're just
Story.
adding on.
That's right.
So
How much are you typically telling your clients who are getting into these conversions or multiplexes, are you telling them a certain percentage or amount to be putting aside in a reserve fund, or that's kind of up to their discretion?
I leave it up to them. I tell them all the time, like, listen, this shouldn't be your active income, right? This is not something you're going to be able to live off of. Like this, cash flow is going to be nice. Like I said, when you have a bunch of doors and you're making all this money, it's nice. But personally, for me, I'm like, I will never just leave what I do and just have investment properties.
Yeah.
Because God forbid, what if everyone stops paying?
Right.
What if everything goes downhill? Then what? So I think it's important to have income coming in. And if you don't need that cash flow, either put it back to service the debt or just put it aside in a reserve fund if need be. Or use that money to do something else and make that money work for you again.
Right. Absolutely.
On the landlord point, like in regards to ways that we can put our best foot forward when we're managing tenants, it's better to be proactive than reactive.
Yes.
Communicate with tenants constantly. Try to, really not buddy with them, but create a really strong relationship where they can tell you when there's damages, where they don't feel like, you're gonna come full wrath in and try to get them to pay for it. Just, hey, we're working together on this.
It's a two-way street.
It's a two-way street.
You get so much more done when you guys are just, you have a respectable relationship and you're not going at each other's throats. Like it just generally in life, you just get a lot more done. You get a lot farther that way, in my opinion.
And tenants are doing you more of a favor as a landlord than you're doing them a favor providing housing, in my opinion.
I think that's the mind shift we gotta change because landlords feel the other way around.
Some do, for
Right.
sure.
Yeah.
Some do, yeah.
Yeah, and to your point, like you really gotta have that respectful, trustable relationship, but also keep that fine balance that you are the landlord or the tenant, right? So when things do shift, if God forbid they do shift, you're able to handle that.
Yeah, absolutely.
Yeah, but on the flip side as well, I'm going to play devil's advocate here. I think it's very important for tenants to also understand, like, hey, yes, the rules are not in the favor of the landlord, but that doesn't mean
Don't abuse it.
don't abuse it.
100%.
Right? At the
Yeah.
end of the day, someone has put their hard-earned money into an asset, whatever it may be. Maybe they have the money, you don't. But at this point in time, they put that money.
Yeah.
And it's going to be an investment for them, their family, their kids, whatever it may be. Don't abuse the rules and make this person and their family go through an unfortunate situation.
I think
because it does
narrative-
happen.
Oh, it happens
too
a
often.
lot.
100%. It just like it happened to us twice this year where we did everything the right way for the landlord and the owner, and they had to liquidate for XYZ reason. And the tenant is well aware we have done everything the right way legally, given them all the notices, but they know the system.
Yeah.
And they know that it'll take us 6-7 months to get them out if we do the N12 or the N11 via LTB.
Yeah.
And they're like, they think that cash for keys is their right. And I'm like, it's not your right.
Yeah.
Because I'm doing everything the right way.
Mm-hmm.
But yeah, like to your point, it should not be played where they can just cash grab.
Yeah, you don't
I
want to
agree.
abuse the system, right? Now, I have a question for you guys
Yeah.
because I feel like I see this a lot on Facebook and you guys work a lot with investors. I see all the time where people say that real estate investors are the ones who have caused the affordability crisis because now all people can afford to do is rent. How do you guys feel about that? What do you think?
I think it's more than just the investors, right? At the end of the day, if they didn't put the money in to stimulate the economy, where would we be right now? I mean, the economy's not doing too well, but I'm not trying to get political or anything, but I don't think politically and economically they've done the right thing by raising the rates to where they raised them.
Yeah.
And if they did raise them, I think it's too late now. I think the damage has been done for way too long.
Mm-hmm.
I don't know. I wouldn't just blame the investors. I think
No, I
I think a lot of people are to blame.
Absolutely.
There's a ton of people, and not to blame, but like it's just more of a circumstance of our environment, because also you have to look at the lending, policies that we're allowed to use as an investor. We're allowed to leverage equity that we have in an income property or a primary residence. You want to make a stop of it at it legit, do not allow you to buy more than one additional property. And then at that point, take 80% loan to value that you use on a refinance, put that down to 60 or 50%.
Right.
These are ways also that you could handicap the investor, probably to the best, for the best of them as well, so they don't get over leveraged. But there's ways that you can also handcuff them so they don't make these decisions to go and have frenzy buying, which is what we saw. Transparency with listings and offer negotiation. I know that's something that Ontario is trying to change as well, but you could say that that's a fault as well, being not transparent during the multiple offer situation.
I think what a lot of people don't also understand is investors put money into these projects, so more housing could be built.
Oh yeah.
Now
That's
with
right.
higher interest rates, builders can no longer build these projects, and unfortunately are going into receivership with these people's money, right? So I think it's a bigger thing at play here. Investors do play a big part in increasing costs for assets, but I think they do it to stimulate the economy. If the rates weren't where they were, I think housing starts would have been way better than they are right now, which would hopefully lead to more affordable housing, but I don't see that happening anytime soon.
No, there's not
the
enough
supply
supply.
and demand, it's always at play, right? We, I think, don't have a lot of supply. The demand is there, and with the new, I guess, changes in the immigration policy and their hopes of building X amount of houses in X amount of years is still not happening. So I think there will always be a supply and demand issue here. And I think it's not so just the pricing going up. Like if they don't build, there's no supply. And if people don't buy, they don't build.
And they won't, exactly.
So it's a catch-22 where you're always stuck in this cycle. And I think the development charges have to be looked at because they're astronomically, they're really high. And
$200,000 a unit.
Yeah, that's a lot.
That's a lot.
Yeah.
Like,
Vaughn.
where is the money being
lot.
allocated? That's the question, right?
Like
The infrastructure is expensive to improve and to create, but $200,000 a unit?
Yeah.
Like that's, we got to look at that.
and if the houses are not being built, people are not buying them. There is a short in supply, but also the government is not making their development charges or land develop, like all
Land
those
transfer
taxes are not
tax,
coming
yeah.
in. So
Yeah,
it's
there's
it's
a
a
lot
whole
of
cycle.
fundamental,
Yeah,
there's a lot of fundamental issues that have been going on for a very long time.
very long time,
right?
for us.
And then what the government will do is try and put a band-aid on it. But it doesn't actually solve the issue or the root
Well, it's a hard
cause.
issue to solve.
No.
Right? It's multifaceted.
And-
Exactly.
And even these new rules that are coming on December 15th, where they can buy up to 1.5 with minimum down and whatnot, but it's just kicking the can down the hallway where
Absolutely.
people are getting into more debt.
Yeah.
I don't
Yes.
think anybody should be buying a $1.5 million house with minimum down,
I agree.
because just servicing that is
Yeah.
very
Yeah.
high. And
We're
God
talking
forbid
like
you lose your job.
More than $10,000 a month.
That's insane.
I can't fathom that, right?
No. Like,
But
are we going to end up having 40, 50-year amortizations? Like,
Well, that's
That
what
could
they're
be
doing,
an
right?
option.
Stop.
That could be an
They're-
option.
they're basically putting people in more debt, and it's just a vicious cycle that you're always going to stay in it. And I feel like, yes, you should leverage, but I think at the end of the day, cash is king,
Yeah.
right? So if you're, and I realized that in the last 3-4 years where, because they would pitch leverage, but leverage the right way, right? The way people have leveraged here right now, not to say that everybody's done the wrong way, but I feel like there needs to be looked at, because we, like, a lot of our people are in debt.
Yeah.
Yeah.
The problem also is like, I'm all for immigration. I'm an immigrant myself, so I'm all for it. But it has to be structured, okay? And we brought in all these people, amazing. But where are the jobs? Like, real estate is one issue, but economically, unemployment is continuously going up.
Yeah.
So what's going to happen
And
when?
good paying jobs,
Yeah, and it's
not just like your minimum wage jobs.
yeah,
right?
and I think unfortunately, as Canadians, they're in a salaried position. This might come off the wrong way. $200,000, $250,000 is a lot of money. But when you look at it, when you make $250 and you take home $150 and you're getting taxed $100K, what's the point to move up to continue to do better when you know half your income is going to be gone?
Yeah.
Absolutely.
Right? So what is the economy and the government doing as a whole to allow Canadians to A, make more money, business owners to continue investing into Canada and hopefully in Ontario, and C, just allowing people to live a better life and bringing the cost of living down. I think there's a lot of damage that's been done, and regardless of who comes, I think it's going to take some time to fix these. It's not going to happen
And when the
overnight.
beautiful sight of double-digit appreciation every year doesn't happen, which it hasn't, that's when these things get spoken about, and
Yes.
you know when
Yeah.
these things hopefully get adjusted. And I was gonna say before, I've just kept this in my mind, and you said it beautifully, which is one thing I thought that we could have done a lot better when we had these growth years in you know the GTA and just on Southern Ontario and Ontario in general, is that we should have created more connecting municipalities, you know, having more urban sprawl. But the reality is that no city will build until people are there. People won't be there until there's infrastructure there to actually go and make it make sense. And I wish that we addressed that when people were in a very frenzy spending mood, instead of just propping up like, you know, like for example, Flamborough, right? That's right. Flamborough had a huge boom on detached, semi-detached, and townhomes, but you know that was close enough to Hamilton where that would have happened naturally.
Yeah.
Instead, it would have been nice to see it a little bit farther away if we can have different infrastructures in place. And these are hard questions, right?
100%.
Yeah.
And I
These
know
are
we
hard,
can probably go on for another 2-3 hours.
Yes,
but
easily.
I wanna keep the time in mind here and trying to like wrap it up and bring the whole conversation back. And we can't really end the conversation without talking about the interest rate announcement that happened yesterday, and just trying to wrap it up and see, like, we've had 5 interest rate drops now this year where people thought that we'll have none. But what I've seen in the market, like, it's not really starting the market. The fall market was, at least for me, was a bit slow in our area. What does that mean for buyers and developers,
Yeah.
in your opinion?
So what I'm noticing, just kind of on the GTA side, I am starting to see more multiple offer situations on the freehold side. We're starting to see months of inventory shrink a little bit, but this is what I think is going to happen while I do some exercises here. So what's happening is we're starting to see this elastic band being stretched. This is freehold, semi-detached, detached properties. And on this side, we have condos and townhouses, freehold and condo townhouses, okay? It's starting to be stretched more and more. But there's only a certain amount that this tension can have before things do kind of snap back more, maybe not like this, but more like this.
Mm-hmm.
And no one has a crystal ball, so I don't know where or when this is going to happen. But what I believe is going to happen is as interest rates normalize, I personally don't predict, and I might be wrong here, but I'm very conservative with the way I project things. I personally don't think we're going to see huge decreases in interest rates next year. We might see maybe half a basis point. People call me, crazy on that sense because everyone's expecting a whole point reduction. I think we're going to see maybe half a point. It's not going to really cause too much of a big dent in the affordability issue. But what I think is going to happen is, as of right now, we saw record numbers of units hit the market. Couldn't have happened at a better time when it comes to interest rates, right? 2023, we saw 40,000 units. 2024, we saw 50,000 units. 2025, we're going to see 50,000 units. These are record numbers. But what's happening is we're starting to see no pre-construction opportunities start. Yeah. Developers are not launching opportunities. They don't want to get caught halfway through, like a launch or selling opportunities where now they have a problem with getting their construction financing, but they're stretched out enough where they have to make something work. So developers are holding off. It takes, Majid, 7 years from an idea to build, to pre-construction, to shovel in the ground, to excavating, building up, to completion. That takes 7 years. So condos or units that we needed by 2030, 2031, even earlier, those aren't going to be done until 2033, 2034. Right. So we're expecting, and this is not me, this is Urban Nation that's releasing this, they're expecting by the year 2028, because again, we had 50,000 this year, they're expecting under 2,000 units, new units at the market at that point. Wow. So the question is, back to my DELT workout here, does it snap back before that, or is it around that time? I think it's going to be around that time, unless, because these are all hypotheticals, I like playing this way, unless the provincial government really does speed up the process of individual single-family homes, detaches, to speed up the process of creating density within that property, which is what Mohammed was saying. And if that happens, then we might see a little bit more of a lagging factor with condos being, less desired for a little bit longer. But there's only a certain amount of difference that freehold and condos can have, and it will snap back. So that's what I think.
Absolutely.
Yeah. Going and relying on the government, I think, is a little bit of a hard thing to do.
But we're starting to see the mentality of homeowners.
Yeah.
Be it because of affordability, be it because they need now space for their family that's growing, but their kids who are now having kids cannot make it work, away from the family unit. So that might be a necessity thing where they're adding units to the property. I think it is a legitimate way for investors moving forward to actually maximize the return on, if they're not in a buying mode, you got to at least maximize or create a catalyst of growth in your pre-existing portfolio. And that is a way that investors are already doing it. Yeah. And I think moving forward, it will be more and more desired as prices become more and more unaffordable.
Yeah. And going back to speaking about the rates, I mean, I'm not a mortgage broker or anything, but these overnight rates directly correlate to variable rates.
Yes, not the fixed ones.
And the fixed rates go off bond yields. So once again, I'm not a mortgage broker. Speak to your advisor, speak to your banker. What's going to happen next year? It's very hard to say. Yeah. That's why I try never to predict 6 months or even 3 months in advance. I always say, listen, if at this current moment, with the current interest rates, if it's a good time for you to buy or sell or invest, you should. But if it's not, take a step back and see. Whenever you're ready is when you should invest. There should never be FOMO. It's not a $100, $200 decision. Yeah. You're spending $500,000 to $1 million. Yeah. Lots of capital. So it should be the right decision. But once again, people have bled for the last 2-3 years. They've dug into savings, credit lines, credit cards have been maxed out. Will the interest rate decreases help them get back into the real estate market? No one really knows. We've never really seen anything like this.
I think some people have been bleeding a lot, and
A
they
lot.
might never come back. Like I've seen some examples, and sadly, like either they were basically very optimistic, or they had the FOMO and they just bought, and now they're not in a good place. But hope the market recovers for them, so they're able to get something out. And Maria, on your side, like, do you feel like your buyers are taking advantage of the news?
They're very cautious right now. They're on the fence, and what I personally like about this market is that they're taking the time to figure out what their options are, to sort out their finances. What is my life going to look like in the next 3, 6 months, a year, to make a well-informed decision? Because what I really did not like during the pandemic market, and I was working with buyers, so we were up competing against 20, 30 other offers. It was exhausting. But when you did win, you're like, yeah, like you felt amazing. But it was so rushed. It was so fast paced. I was quite worried for my clients at times, because there was only so much time in a day where we could chat about what the options were and make a super well-informed decision. We obviously did the absolute best that we could, but when we are spending $500,000 to $1 million, as Mohammed was saying, you have to take time. You have to think it over. It is not something that I think should be approached impulsively. I think it's something that you need to sleep on for many, many nights before you make a move, in my personal opinion. Unless you know this is what I want to do, you come to that conclusion, absolutely. But especially for someone who myself works with a lot of first-time home buyers, they have a lot of questions. They don't know what the process looks like. The pandemic market was extremely scary for them because we were moving like this. So I personally like it now that it's slowed down a little bit, because I'm working with buyers, so we can find those opportunities. We can include conditions in our offers again. We can do a whole lot of due diligence and have the time to do it as well. So I like it in that regard. I know, for people who have been wanting to sell their property but they don't want to take a loss, they're feeling certain feelings about that right now, and that's definitely difficult for them. I think a time will come for them where it will be good again. I'm thinking the spring market of 2025 will be fairly robust for home sellers. It's not going to be anything near what we had, at the peak of February of 2022 or months prior to that. But I think we'll get back to a healthy, potentially more balanced market, and I think buyers will feel a little bit more confident to make a play at this, or not at this time, but in the new year in 2025. So yeah, I've talked to a lot of people who they're just waiting to see what happens. I had a few conversations yesterday after the rate decrease, who have said, yeah, like I'm feeling a lot more confident now that maybe I could go into a variable rate mortgage. Hopefully fixed rates come down as well. So there definitely is a little bit more confidence there, but people I find are treading very cautiously.
Yeah, this time is good. I like touching on what you said. 3 years ago, when you were working with buyers, the 4 things you looked at when putting in an offer: price, deposit, conditions, closing date.
Yeah.
And for a first-time home buyer to go in, see a house, fall in love with it in that moment, put an offer in competing against 10 other people, and the next day when their offer is accepted but they've changed their mind, what do?
No conditions.
No
right?
conditions.
Like,
Right? So unfortunately, that's what it was. But fortunately now, people have the opportunity to go in, see the home, see it again, maybe a couple more times.
Yeah, take
put
time.
those conditions in.
I'm
Yes.
very
You know?
glad that now we have time on our side.
Yeah.
Whereas we didn't before, and it was very scary for people. And I felt like, because what I try to do, or I'm sure what we all try to do, is give them a good experience where they're comfortable,
Yes.
but also buying something that they're content with. Because I tell my buyers always, and my sellers, never have basically buyer's remorse or like seller's
Yes.
remorse or whatever, because we try really hard for them to not do that.
Yes.
And I felt like in that market, it was very hard for us to not like, or for them to not do that, because sometimes people were like, shit, I shouldn't have done that.
even setting up price, like you can have a perfect plan in place, and this happened to all of us, where you go and see 10 properties, they find one they like, we do our research, we do the analysis, we do our price approach, we do our max that someone should be paying for this property, until the day of the offers, you notice that there's 18 other buyers you're competing with, your whole plan's thrown out the window, you close your eyes, You throw that, that price.
All
at
the research
wall.
has gone out the window.
Yeah,
Yeah.
and you hope that you're top 3 so you can maybe negotiate closing date.
Right.
Yeah.
Maybe.
Yeah.
That's not a market. That's not a
But
fair
I feel like
market.
sometimes
No.
people actually thrive in that kind of market because they're like, now I'm competing. Everybody wants this. Because right now there's a lot of opportunities because nobody wants it. I don't
Yeah.
want it too. So I guess that's like the buyer psychology. Maybe
It's the urgency side that I said at the
Yes.
beginning.
Yes.
It's the honestly, as realtors, like it is the easiest market to sell in is when we have an urgent market.
Absolutely.
Yeah.
But it's a fantastic time for some buyers, not all of them, right?
Yeah.
Because we can't say it's right
as long
for
as it makes
everyone.
sense for you.
Yeah,
Yeah.
right.
Oh, there are
Where-
so many opportunities right now.
Absolutely.
And why do you think large institutional holding companies are buying right now? They're buying right now because they are not competing against the everyday purchaser or investor in
So they can
most
negotiate
cases.
right now too compared to in the market before where you couldn't.
Yeah.
But
Yeah. It's
know.
because it's a physical asset.
Yeah.
There's more than just cash flow and passive appreciation that go into it. If you just hold it, it's what they say, it's not timing your investment, it's time in the investment.
Yeah.
And time will always be your friend there.
Yeah.
Now you just have to be able to withstand turbulence, and if you have a long-term approach, it makes it easier
Yeah.
to grasp at least the long-term approach during turbulent times,
Yeah.
even though sometimes it's hard financially.
100%.
And touching on that point quickly, a lot of people think what happened in 2020, 2021, 2022 was all the realtors' fault. So just trying to look out for all my realtor partners here.
Thank you.
Unfortunately, it wasn't our fault, right? When you work with someone who's professional, someone who knows what they're doing, like everyone here, they truly, truly work for your pockets and not their own. I know commission breath is a very big thing in our industry, right? People can see it, people can feel it. But at the end of the day, when you work with a true professional, they always work in your best interests. And at the end of the day, whether the transaction goes through or doesn't go through, what matters most is that the client's happy
Yeah.
and they're
Absolutely.
satisfied. So
Yeah.
You gotta separate yourself from results.
You
Yeah.
always have to
100.
respect their money. Doesn't matter if it's $10 or $1 million,
100%.
right?
Yeah.
And I think this is probably the perfect point to kind of wrap up. And because I don't know how long we have gone for, I don't know what the time is, Nick, but I would definitely like to thank Tyler, Maria, and Mohammed for a very, I think, intriguing but knowledgeable conversation and bringing everything into, I think, an hour and a half that we went on for. I have no idea, but thank you for that. And for the listeners, if you have stuck to the whole thing and you're still here and listening to us, definitely would love for you to share it with a friend or a family member so we can bring value to them as well. And for all the guests that are here, what's the best way for Tyler, for somebody to reach out to you?
You know what? Just follow me on Instagram at Tyler Walbourne, WALBOURNE. I love the feedback, the criticism. I'm a big boy. I can take all of that. Please, just if you like my content or if you think I should be improving it, let me know.
Let
I
him
enjoy
know.
this.
And Maria, what's the best way to reach out to you?
Instagram, my personal is maria.angelescu, angel, and then ESCU. That's how I always used to spell it to people. And then our team page, themother-daughter.team on Instagram and YouTube, Maria Angelescu.
Perfect. And Mohammed?
same for me. Instagram's probably the best at Mo, M-O-E, Batra, B-H-A-T-D-A. Or my phone number, 613-970-2041. Don't call me with scam calls.
Yeah, just put your number out there.
No. Honestly, if you have any questions, whether it's real estate or not, or if you're just looking for advice, I'd be happy to help. Just don't try to sell me something, okay?
And I will have all their Instagram handles and phone numbers in the description for this episode on YouTube, so you can definitely get in touch with them. And also subscribe to the Lodhi Roundup on YouTube. And I'll see you on the next one. See you soon. Take care.